If you're thinking about becoming a residential loan officer, this might be a really good video for you to watch. I would recommend to watch it until the end, because what I want to do is go through all the hard stops that I personally faced myself when I got started. And if you don't know who I am, my name is Evi Schaff and I'm the owner of a company called Loanbrook. We're a wholesale mortgage company in Los Angeles, and we fund both residential and commercial loans. And as a matter of fact, I'm in the process of building out the part-time residential lender academy, and if you're interested, you could check it out. It's available for you via link in the description of this video. During a very short period of time while I am building out the academy, there is a promotion available. Take advantage of it for a discount for a very limited amount of time. Once the program has launched, then that promotion will no longer be available for you, all right? So with that, what I would like to do is discuss the different sections of the transactions that are going to be most complicated. And as a residential loan officer, your true job is really one of a salesperson. The only challenge is, unlike somebody walking into a conventional store and picking up different items, they actually have to qualify to be able to buy whatever it is that you're trying to sell them, which obviously is conventional loans. 90% of your business, at least in the beginning, is going to come from funding general loans that are purchased by both Fannie Mae and Freddie Mac, and those guidelines are national guidelines. So that's what I want to talk to you about today. With that, let's dive right in there. There's different buckets that I want to discuss, and we'll split it into four. Obviously, in the first bucket, there's going to be all the questions that I personally had when I got started, and ironically, nobody was really there to answer them for me. All these questions, whether they are going to be income related, guideline related, parameter related, we all have them. And this one is what creates the most amount of stress for us as a residential loan officer, because if a real estate agent was to ask you, hey, you know what, I have this buyer here, do they qualify? Let me give you the parameters of the lending transaction. More than likely, if you don't know how to run the deal, you'd get super nervous, and then you don't want to lose that opportunity. What would be the best way for us, at least in the beginning, to be able to overcome those questions? And so that basically leads us into the next bucket, which is the matrix. No matter what lender you're going to be using, they basically pull in the matrix and the guidelines from the national resources, which, like I said, is Fannie Mae and Freddie Mac. And let me explain that to you for a moment. Let's just say that I am Rocket Pro Mortgage or Quicken Loans or any one of the really big lenders that you're familiar with, and you wanted to fund your loan as a residential borrower. There would be a matrix in place, which is basically the perimeter of the loans. It would basically identify to the lender themselves whether they could fund the loan for an owner-occupied, whether it's a purchase or a cash out, up to a certain loan to value with a certain credit score. And we'll keep it super basic, all right? So we'll call that the matrix. And when somebody asks you these questions, they're either available for you on the platform of whatever lender you're using, if you're an originator, or you could just Google them and look online for both Fannie Mae and Freddie Mac guidelines, pull up the matrix, and all those questions are gonna be answered for you. Complete lifesaver. Didn't know about it when I got started, and there you go. However, when we have the matrix, and we know as a lender, like I said earlier, that the loan is in fact doable, if I'm going to go ahead and fund it, then what's going to happen is I'm going to fund it on something called my warehouse line. And to keep it super simple, it's just a credit line, similar to if you were going to fund something on your home equity line of credit, and you knew that somebody's going to come and pay you a check for it, actually more than what it is that you've spent. So if you knew that you were going to buy something for $20,000 and then a week or two from now somebody's going to come and buy it for $25,000 from you, then you would do it time and time again, right? And it's exactly the same concept of how the lender operates. The only thing is that there's rules to the game. And so these rules, we'll call this parameters, okay? And then we will call this guidelines, which is basically the rules to the game. And so this is a very, very easy way to understand that although we have parameters in place, this here is the fine print. This is also available for you on the internet when you go to both Fannie Mae and Freddie Mac guidelines. If you wanted to get more specific about any particular lending transaction or scenario, you know that you can find it in the guidelines. As long as the lender followed both the matrix parameters, which led them to the guidelines, and followed the rules to the game. And how would they actually do that? Every underwriter that gets a file has a ton of check boxes, and they have to go through. The majority of it falls under, right? There's going to be a couple major buckets here, and we're going to discuss them right now. Income, credit, assets. So under each one of these categories, there's going to be different guidelines, which is going to be instructions as to what this particular, we'll just say, buyer, which is the person that comes and buys these loans from the lender themselves, and that buyer is Fannie and Freddie Mac. For those of you who are going to get started, this is where the majority of the business is going to go, because it's national, so it doesn't really matter which state you're in America to be able to make this happen. As long as the lender, whomever you're using, followed the proper guidelines to underwrite the income, the credit, and the assets, then they will have no problem selling the loan. And the reason I'm telling you this is because a lot of people are going to ask you, isn't there any flexibility? Can't we do X, Y, and Z? Why isn't the lender doing this, and that? They're only following the guidelines so they can sell the loan and make money exactly the same way you're trying to make money by funding this loan, right? Exactly the same. And I think that if you really wanted to know what the lender is really looking for, more than anything, they're focused on debt. And what do I mean by that? So when I approach a transaction, unless I just make a lot of money and debt is absolutely no issue, then everyone's always going to pay really close attention to the debt ratios. And the way the lender qualifies you is basically the debt that you currently have to or against the income that you have coming in, and that's going to tie into a certain level of ratios that is either acceptable or not acceptable. And throughout the life of the transaction, what you're going to see is that the lender constantly pokes at the debt. So as an example, when you run the credit and you see inquiries that none of them have hit the actual report as debt. So the lender is going to require to know that if any one of those inquiries actually caused the borrower to extend credit, which means that anything that they could actually see on the report, they're going to size up, but they're constantly going to look for things that they cannot see. There's only very little that you can omit, assuming that you could prove that somebody else has taken over that debt for a period of 12 months consistently. And then the next thing, which is going to be super important, is obviously the income piece. And I could do a full video on income, but at the end of the day, when you're putting the debt up against the income, the maximum debt ratio cannot exceed 45 to 50% to actually qualify, and this is gross income. So as an intro to you being a residential loan officer, and you're wondering, I have a ton of questions, where do I even get started? Just like we've discussed earlier, the matrix is available online. The guidelines are available online. The only thing that's not available online necessarily is a mentor like myself who's able to go through all these questions and answer them for you in video format, unless you're a big fan of my channel and of course you subscribe, and if you did, thank you so much. The reason I'm telling you this is a great segue for you to take advantage of the part-time residential lender academy, which, like I said earlier in the video, is available for you now. If you have any questions, then please feel free to drop them in the comments of this video. I look forward to them. As a matter of fact, I do enjoy reading your comments. I would love to know the takeaway. Where are you in the process if you're watching this? Are you trying to become a loan officer? Have you taken your NMLS examination? Do you have any particular questions that have to do with the scenarios that we've discussed today? If you've enjoyed the video, please make sure to give it a thumbs up, because it's really the only way that other people like yourself who are trying to find this information on the internet are able to see it. And lastly, of course, if you like videos like this, go ahead and subscribe to my channel. I appreciate you watching this. Thank you for being here. I'll catch you again on the next video. Take care.